fundsupermart.com.
What is your outlook for Asia in 2015 and what are some of the catalysts do you see for this year?
MSCI Asia Pacific ex Japan has actually done very well year to date. It's up actually about 7.5% year on year in US dollar terms. If you look into separate countries, China and Hong Kong were the best performing markets, up about 16% year on year. We remaining to be constructive of the Asia Pacific equity outlook for the remaining part of 2015. But we do see increased volatility in the market, especially nearing the Fed rate hike towards the later part of this year. We have seen interest rate cuts by major countries in Asia in the first quarter of 2015 for the likes in Korea, Australia, China, and India. We continue to expect easy monetary policy for the remaining part of 2015, particularly in China, as we expect more interest rate cuts and reserve requirement ratio cuts in the next coming months.
How much further upside is there for investors and are valuations appealing? What about the earnings outlook?
Okay, on Asia as a whole, we do not see the valuations being stretched as yet. If you look into China, despite the recent rally, it's still trading at below mean for the MSCI China at about 10.5 times versus the average of about 11.3 times. For the earnings outlook, actually we see earnings expectation actually being revised upwards in Taiwan and Korea, and the MSCI China EPS revisions downwards has actually slowed down. Having said that, we do see pockets of weakness in other parts of Asia, particularly Southeast Asia. For example, in Indonesia, recently in the first quarter earnings season, there was actually a broad-based disappointment across most sectors as the infrastructure spending had not materialized yet. Even in Thailand, the government actually revised down their GDP growth guidance for 2015 to the midpoint level of 3.7% from the previous of 3.9%. However, we do see that for 2015, Asia Pacific as Japan likely to grow about a high single digit. With the EC monetary policy continue, we expect growth potentially to pick up in 2016.
What are some of the key macroeconomic challenges you expect to occur?
We are now entering the 7th year since the global financial crisis in 2008. However, we still haven't seen a sustainable, strong recovery in terms of global GDP growth. The number data that we see out from the States was actually mixed in first quarter of 2015. GDP data was only up 0.2% and likely to be revised downwards. However, there was mixed sign as the labour market is actually picking up with the average payroll rising. So I think for us, the most important thing is growth. Growth continues to be challenging. If you look in this part of Asia, China is the key engine of growth here. However, China data that came out recently continue to disappoint. With industrial production and fixed asset investment continue to decline in the latest data in March 2015. I think for China, they are likely to enter a new normal growth for the next few years of 6 to 7% compared to the historical level of double-digit growth. So growth is yet to witness in a global market environment. Other key challenges or other key things to watch out would be the oil price and the government bond yield. As we have seen recently, the extreme positioning has actually caused volatility in the market.
Which countries within Asia you have the most and also the least preference for 2015?
At this juncture, we continue to like North Asian markets, particularly China and Hong Kong, due to the easy monetary policy that we mentioned just now, and also the government effort to minimize the downside risk in terms of the growth. We also like Korea and Taiwan because the evaluations are also attractive, as well as the EPS consensus earnings upgrade as we have seen so far this year. For the ASEAN markets, we are more selective due to the outperformance in 2014, and also the valuations are less attractive compared to their peers in the North Asia market. We are selective into buying some names within ASEAN.
What advice do you have for investors when it comes to selecting a suitable Asia equity fund for their portfolio?
I think it's most important to choose a fund that suits their risk appetite for the investors. When selecting a fund, I advise that investors should look at the manager's style as well, whether it's growth, momentum, value, or pure macro-driven approach. I think for us the key is the consistent performance of the fund regardless of the market cycle. For our Asia Equity Fund, we focus a lot on stock picking. We also have a top-down overlay approach in terms of country allocations. For example, our Kenanga Asia Pacific Total Return Fund, we have overweighted China since the end of last year. That's actually gave us a lot of alpha in terms of our fund performance because of this country allocation approach. We are also very disciplined and mindful of the valuation. We will try to lock in gains for stocks when we think the valuation is no longer attractive.